Does this statement from Jay Powell today, does it change your mind about Meta to either buy more or buy more of those Mag 7 names?
Well, it's always better to buy low and sell high, Frank. So we executed this trade yesterday in advance of the news. And literally, I think we paid $236 yesterday. So we're up almost $20 since then. We were not expecting the big spend for Google, and also as an Alphabet shareholder, that's terrific. But overall, you've seen a stock that's really rolled over recently. We still look at Meta. It was our #1 pick going into the year. I think it continues to be. We look at this pullback and took advantage of it yesterday, bought another 1%. And yes, we sit here today looking lucky and smart. But when you see weakness, those are the times to deploy capital.
What about the froth in the market? Jason Samp, I'm going to come over to you. I'm not going to give you as easy a question as we gave Kevin. With the idea of the froth in the market, I'm looking at some things like the ARKK, the ARK Innovation ETF, the SPHB, the Super High Beta ETF, or the S&P High Beta ETF, things that have had outperformance in recent weeks. They're outperforming today, certainly. The Quantum Computing ETF, Palantir, moving back to the upside. Is now the time to get back in those names, do you think? Investors, they've just kind of shaken off the worries about valuation and that froth in the market?
I think so. I mean, it's interesting looking at the Russell 2000 up almost 4% today. So, yes, I mean, there's been some digestion.
So yes, you would buy the ARK Innovation ETF? You would buy Palantir at these levels today? It has pulled back double digits.
Let me quantify this. So I'm talking more about some of the hyperscalers, the large cap names, right, that have pulled back a little bit. Some of the adjacent plays, right, like the ANETs of the world, Arista Networks. I think those are names that you can look to increase your allocation. Again, for me, this is a moment in time, and just in terms of digestion, I think the AI themes are long-tailed stories, and I think we're very early.
But that's broad. Are you talking chips? Are you talking the Mag 7? Are you talking some other adjacent names like in Oracle? We're going to talk about Oracle in just a bit too.
Yeah, no, I think you could buy a lot of those, and I think for me, as a thematic investor, when I look at the broader space, I think a lot of these names could work. Industrials as well, power, right? And we'll talk about some names that we added. But I think broadly speaking, it is an opportunity.
All right. So you mentioned industrials, by the way. You bought some Eaton. That's a stock that's pulled back as well. So are you looking for pullbacks, or are you also buying into strength?
We've been looking at Eaton for a long time, right? So Eaton's up almost 20% in the last year. It's down 10% in the last month. That's kind of the AI trade, taking a little steam out of that. It's up 6% year to date, but it's a power play, right? So when we think about data centers, and that's obviously all the rage and all the talk, I mean, soon to hit a $1 trillion capex in the next year or two, right? So for me, this is a nice place. It's small cap. I mean, it's not a small cap. $68 billion company based out of Ireland. It was an opportunity for us to finally get in here. AI workflows will drive 160% increase in power needs by 2030, and this is a name that obviously plays very well in that space. So that's why we added to it.
While we're talking Mag 7 adjacent names, Kevin, you rolled down a call on Oracle. Walk us through that trade.
Yeah, this sounds confusing, but it really isn't. So for viewers who want to hedge out risk, we were seeing a market that was rolling over a little bit. There was some rotation for sure over the past 2 weeks. We had written a third of the position, and we talked about it last week on the show with Scott. We wrote a covered call on Oracle, 1/3 of the name. The stock pulled down a little bit, and this week on Tuesday, we replicated that trade again, wrote a second covered call, and then yesterday into weakness, we closed both of those out, rolled it out one more week, so we're at 237.5. Stock's probably around 236 right now, so we're still okay, but we literally credited our net credit of $16 a share. So if we do let this position get called next Friday, effectively we're out at 253.5. Now, I'm not sure that's the way we're going to do it, but this is a stock we really, really like, but we were playing the volatility heading into today's speech, and I think that trade worked out really well for us.
All right, Jim, you're an Oracle shareholder as well. Your take on his trade, stock story in general?
Well, it's an option strategy, and I know call writing, and I like call writing, and I respect what you did there. Oracle's had a fabulous run here this year. We all know it. I've held it for about 2.5 years, so I'm up almost triple on it, and I trimmed it actually a couple of weeks ago. There's nothing really to read into that other than if you're a portfolio managing a portfolio manager, you want to manage risk. And so if something gets too big in the portfolio, like Oracle did, you trim it and add to things that haven't gotten as big. It's just as simple as that. But I think for the long run, it's a key player in the infrastructure build out for artificial intelligence.
All right, while we're talking about AI in general, Kevin, I want to get to one more of your moves. You bought some Uber. A lot of people see that as an AI autonomous trade as well.
Yeah, I mean, Uber's got a lot of different fans, whether it's for the autonomous driving, ultimately for rideshare or for delivery. This is a name we've owned twice before. We made a little bit of money. We wrote covered calls on it, kind of missed the big run. We've been waiting to get back into it, but we do have some cash on the sideline. We wanted to get into it before today's speech. We took a 1% position. We really like it long term. They're finally profitable. They're buying back shares. We think the stock's going to break 100 soon, and at least we want to be in the name, enjoying that, not looking at it and wishing we were in it.
All right, we also saw some news that Waymo granted its first permit to begin testing autonomous vehicles in New York City. So the idea of autonomous vehicles in America's biggest city, but it's Waymo. Is that a plus for an Uber, or is that something that concerns you when it comes to Uber? We just had some analyst notes saying that the bigger Waymo gets, it's actually takes away from Uber and some of its business.
You could argue either side. We also own Alphabet in the growth portfolio, so we've got Waymo there. I think ultimately Uber could become a super app, and we've heard Josh Brown talk about it a lot, being the catalyst to get access to the rides and being sort of agnostic as to where the rides come from. So I'm in that camp, and I think it's a plus.
All right, Weiss, you bought some more Uber as well. What was the catalyst for you to buy? Was it on the idea that we'd see a dovish Jay Powell and the stock would move higher like it is? Is it on the idea that autonomous driving with the Waymo news is going to become bigger and move faster than maybe we previously expected, and Uber is a beneficiary?
Well, first of all, I want to clear the elephant out of the room. We're all sitting here and we're looking at Kevin, and clearly he got a new wardrobe consultant, and he's looking more investment bankerish. So love that, Kevin. The blues look well on you. No, I bought it because it wasn't a big enough position for me. I still believe, I was on the show early in the week and believe that it goes through 100, and I think we'll get there. The stock's sort of been, I'm not going to say it's been ignored because it's done well, but it's just not in the normal narrative that we've heard about Uber. So I just want to build the position up, and not surprised it's up today as everything is, but I may add to it again in the future if it pulls back.
Yeah. Overall, when it comes to autonomous driving, Jim, do you have any, I know you own Alphabet as well, do you have any hard thoughts about it? I actually know somebody that was out in Arizona taking Waymos, and they were like, it works great out there, big open roads, but they had a lot of questions about the reality in a big city like a New York, a Philadelphia, a DC, where it's a bit more congested.
The uptake is there, and it's already happening in many cities. Waymo is the clear leader right now. It's on the hockey stick inflection of any new business. It's here. I mean, frankly, it took a long time. I honestly remember talking about autonomous driving in like my first session on this show in 2013.
Really?
Here we are 12 years later. It's finally taken off. It's taken a long time. It's a reason why I particularly like Alphabet. I know it's not showing up right now in the financials, but it's likely to.
Snipe, any take on the Waymo news, Alphabet just in general right now? There's a Meta deal. There's the idea of Waymo coming to New York City as well.
Yeah, no, I mean, when I think about, obviously I own Uber as well, and I just think about it as the ultimate platform, and I think about all this beta testing in all these cities is obviously accretive for the stock, whether it's Austin, Texas, Arizona, Philadelphia, New York. Profitability, as Kevin mentioned, is obviously been a new story in the last few quarters for them. So I think they have a lot of leverage to pull, and I think ultimately wherever the AV that you're selecting could be found there on the Uber platform. So that's why I continue to like the stock.
All right, we got one more move to get to. It's funny that Weiss mentioned your wardrobe. We're not going to focus on it, but you made a move in the banking space, in the investment banking space, actually.
Well, that was the reason I borrowed my dad's suit this morning on the way into work. We sell into strength.
You look great, Gordon. Gordon, Mr. Gecko, you look great.
JP Morgan is a name that we've owned. It's a stalwart in our portfolio for many, many years. It's done incredibly well. We're up 30% in the past few months, 22% I think on the year. And what we did is just pure risk management. So we run a 5% max weighting as a target. We had a stock that grew to 6%. We were able to take profits, utilize that 1% profit, roll it into Meta, and this is just the way professionals manage money. It's not about us losing any conviction on JP Morgan. It's just nuance and trying to take advantage of what the market gives you.